So, hello everyone, and welcome to our panelists as well as our audience to today's discussion on MiCA in action, how to navigate the new digital assets landscape. My name is Anne-Sophie Kappel, and I am the Executive Director at the Digital Euro Association, and I'm very happy to be hosting our session today. First and foremost, I'd also like to thank our DEA members for their continued support as their engagement and contributions are really instrumental in driving our mission forward and in making opportunities like this possible. If you're not yet connected with us, I encourage you to follow the Digital Euro Association on X and LinkedIn, or also sign up for our newsletter to stay up to date on all things related to digital money. We will also be hosting another edition of our Digital Euro conference this year, which will be held on March 27th in Frankfurt. The Digital Euro Conference is a leading conference on digital money and brings together regulators, policymakers, financial institutions, as well as industry leaders. And if today's discussion sparks your interest, then you won't want to miss the in-depth conversations at the Digital Euro Conference 2025. As for today's discussion, we want this to be engaging and interactive. So if you have any questions, please submit them in the YouTube chat throughout the discussion, and we'll be addressing some of those in our Q&A session later on. So with MiCA entering into full force this year, this topic could actually not be more timely. But let's be clear also, MiCA's journey did not start today, and a lot of hard work and effort has already gone into its development and its implementation, not just from the regulator side, but also from the industry, like, from our panelists who have been working through its challenges and opportunities firsthand. If I may welcome everyone here today, and thank you once again for taking the time. I'm going to start with you, Cam. If you want to introduce yourself and say what you're currently working on, that would be great.
Yes, hi, thank you. Very happy to be a part of the panel. So my name is Cam Dillon. I'm a lawyer by training, and I'm the Deputy CEO at Eurodollar. Eurodollar is a MiCA regulated e-money token issuer. The first token we'll be issuing is pegged to the US dollar. So that's what we're doing at the moment.
Thank you. Then Christian, if you want to go ahead.
Sure. Christian Steiner, working at Bitpanda since quite a long time. So I joined before the whole regulation came up, even before AMLD5 was applicable. So if you want to say it, wild west of crypto back then. I actually joined from the regulator. I also have a dual background in law and business, and was always focusing on regulatory compliance and the things. So was also mainly involved in setting up the whole MiCA structure for Bitpanda.
Thank you. Kemal, if you want to go ahead.
Thanks for having me. Hi, I'm Kemal, a lawyer at Ennerton. Ennerton is a law firm located in Germany and Luxembourg, and we're a boutique law firm which is specialized in regulatory law like payment, banking, compliance, and so on. And some of my main fields are payment and especially crypto, and that's the reason I'm here. Thanks for having me.
Thank you. Boyka, also as a legal expert.
Sure. Thank you. Hello, everyone. And thank you for the invitation. Yeah, so my name is Boyka Deleva. I'm a counsel in Clifford Chance's Luxembourg office. Actually, I'm a financial regulation lawyer since even before actually MiCA and all this indeed regulation hit the crypto market. We're currently, of course, advising both financial institutions that are more and more engaging into the crypto market, but also, of course, let's say startups that would like to see how actually their project can be realized with MiCA now in application.
Thank you. And Elise?
Hi, everyone. I'm Elise Susie Watts. I'm the Executive Director of Global Digital Finance. We are a nonprofit industry association. We have a wide range of members, anywhere from banks to startups and digital natives and everything in between. And we work on best practice and standard setting across industry, a lot of policy and regulatory work, a lot of consultation responses. And I'm also a former regulator. I was at the FCA for several years in the UK. Thanks for having me.
Perfect. Thank you all so much. I am very much looking forward to unpacking today's topics with you, and the range of expertise and perspectives all of you bring to the table will hopefully make for a great discussion. I would like to, first of all, give a little bit of an overview whereby, digital assets, whether that's a crypto or a stable coin, all of that, all these topics are on everybody's lips today and may very soon also be in everybody's pockets or wallets. And MiCA undoubtedly in this regard marks a milestone whereby it is the first regulatory framework that systemically covers the overall crypto market, from issuing or trading to custody. And that also makes the EU the global pioneer in unified crypto regulation. So today we'll discuss the intricacies of MiCA, including its practical implementation from a legal and compliance perspective, as well as its real market impact, both so far as well as in anticipation of future developments. And the idea is for us to bridge the gap between MiCA's black letter law and its practical realities. So when we discuss MiCA, we are, of course, looking at the European context, like the impact on the European market, or its interplay with other European regulations. So it becomes clear that we can't view it in isolation. And this, very importantly, also extends beyond European borders. So we need to consider how MiCA fits within the global landscape and how it compares with regulations in other key jurisdictions, or whether it could set a global regulatory benchmark for crypto regulation. So therefore, we'll dive into the legal and compliance side of things, where as a baseline, we need to assess these aspects and what actually is covered under MiCA. So it introduces, as we know, distinct categories such as asset reference tokens, as well as e-money tokens, etc. What key distinctions should we be aware of, and are there still challenges in classifying certain assets? I think that's a very important thing to first clarify. Christian, I do know that Bitpanda just published a comprehensive guide to MiCA explaining everything you need to know. So perhaps you could summarize everything you need to know.
Perfect. And I think it's MiCA is a little bit more complex than just this 5-6 slides we published, but nevertheless, it should give you a first overview. So I think when we look at the issuing side, we need to distinguish three things. That is e-money tokens, asset reference token, other crypto assets. I think overall, those three should not be too hard to distinguish. I think we'll also have a lot of literature already that goes in that direction. I think that we have some clarity. I think, at least for me and for big parts of the industry, the pre-question to it is, what is a MiFID instrument and what is a MiCA instrument? So one of the problems we see in this regard is that MiFID itself is not harmonized. So that is not the regulation that is directly applicable, but is transitioned in national law. We see very different interpretations. We see very different formulations in the law. That already starts when you look to Germany or Austria, but it also goes beyond that. So that is a problem I see that goes directly into MiCA. It's already a little bit of a deep dive topic, so maybe some of the panelists want to also explain a little bit more the overall thing. But one of the things I see that is really important for the industry is this clarity that is still lacking regarding what is a financial instrument, what is a crypto asset. ESMA tried to publish some guidelines on it. Mostly it was not received too well. So it was like, thanks, it's clear, but also it didn't add more details. I guess this is a topic I want to highlight. And other than that, we can go fully deeper into cusp services and also the issuing part. But let's stay high level before.
Yes, perhaps, if any one of our legal experts specifically want to say something about that, feel free, now is the time.
Well, I would just like to add something regarding e-money token, because e-money token are basically e-money as well. And there are some uncertainties regarding payment regulation and how much payment regulation is also applying. For example, if I have a license to provide crypto transfer services, does it mean I can also transfer e-money token, or is a payment license necessary as well? And that's a big question. And there's a big hope that PSD3 will bring more certainty. But if you take a look at the drafts, not really. And that would be a big challenge.
Yeah, maybe one thing to add from my side. I think I think Christian very nicely alluded to that. I think very first thing is to consider whether you are actually in the scope of MiCA or not. So one of the things that is excluded is indeed financial instruments. So that's typically shares, bonds, UCI, units, shares. So all this, even if it's tokenized, issued natively, and can be called crypto assets. Even in the US, I think it's commonly referred to as crypto assets. That is outside of the scope of MiCA, and that is covered by our financial sector legislation, like basically MiFID, and let's say the banking regulations. So in terms of and for instance, even deposits. So deposit tokens question: are they subject to MiCA? Aren't they? But then in terms of the three different categories that Christian alluded to, and I think it was also referred to now, what is really important is whether are you within ARTs, so asset reference tokens or e-money tokens. And if you're not, then by nature you fall within the, let's say, catch-all category, which is other crypto assets.
And I would just maybe add one more thing to underscore that, because I think this is a really important point and one that is sometimes frequently misunderstood, is that MiFID II as a directive supersedes any national frameworks that currently apply to these crypto assets, and it has to be complied with in advance of MiCAR regulation. So essentially, like Boyk was saying, if you have a tokenized form of, a deposit, structured deposit, a security, you have to comply with MiFID, and that is kind of the overarching framework. And then you kind of go that level down to MiCA, and that's what it means for MiFID II to be a directive. And I think that that's a really important nuance, because as you say, sometimes people think, oh, it's crypto, it's digital assets, I just need to look at MiCA. But in fact, actually, you need to look at all the other European and EU regulation that applies, like MiFID II, but also things like DORA, which I know is not the topic today, but there's a lot of really crucial pieces of regulation that will apply in order to be compliant and meet those regulatory expectations.
And to maybe add another layer of complexity, you cannot really passport what is not. I need to go back one step before I can explain my line of thought in this regard. So the topic is, if you have an asset that is within MiCA due to the analysis of one NCA, let's say you are in, I don't know, Luxembourg, and they confirmed this is a MiCA asset, it's quite unclear if that is a passport that would then bind all the others, or if this is actually a passport that would only bind, that would not really formally bind the other ones in the interpretation. Because the pre-question to all of it is it a MiFID one or is it a MiCA one? So if the, for example, German authority would see it differently, it's going to be very interesting how it plays out. If they then would challenge that, if they would accept the decision of the home NCA, which is very common normally, but again, this is a pre-question, and it's going to be quite interesting how this plays out in the, I would say, in the day-to-day practice. We had some exchange of thoughts also with the European Commission on that, and we heard that they are more on this is a passporting thing, so the host should not involve. If at all, they should go to ESMA. But I'm not entirely sure, and I'm not entirely sure this brings the right level of legal certainty for everybody who is really bringing out such a product, because it could lead at the end that you would be potentially at least doing illegal services in another country, which is a quite high risk.
Yeah, Cam, maybe because you have scored an EMT license, maybe you yourself have some insights to share here in this regard.
I think the e-money token is perhaps the more straightforward of the other categories, is really the main thing. So I think a lot of valid points have been made here. I think being pegged to a single fiat currency kind of made the landscape a little bit more straightforward to navigate. But I definitely agree that it becomes more complex when you start looking at asset reference tokens, and even more broadly then what constitutes a crypto asset. And then you also get into the category of utility tokens. And so I think there are areas that would benefit from clarity.
Yeah, and I guess the whole regulatory overlaps where, where everything is a bit conflated or confusing also does not help at all. Like we touched upon, we have MiFID, we have DORA now coming into force as well. So it seems like there is a lot to navigate, like you say, which probably makes the whole licensing and approval process quite complex as well. So what are the main challenges that you did encounter in that respect?
I think so. MiCA being in place is a really great entry point, and it's excellent legislation to have, and that's something I think Europe should feel really proud of. I think the other side of that is because we're it's a young industry going through the licensing process. It took it, so just by way of a reference, as a process to complete. And I think there's a lot of there are a lot of unanswered questions that if you're an early entrant in a new regulation that kind of come up, and it's an untrodden path. So, together with the regulator, you're kind of navigating and trying to get to a place that is in the spirit of the regulation, and also yeah, it's kind of fully understood by everybody involved. So I don't think it's the easiest process when you're one of the first. But again, it's nice to be part of something where you can shape and influence how the regulation is being implemented to some degree, and working with the regulator to achieve that.
Yeah. And I guess there's also differences in terms of where you apply for your license, because as much as MiCA is a European regulation, there are multiple European member states. So perhaps from a legal point of view as well, do you believe that we will see differences in implementation across member states? Surely in speed of implementation, we have also seen that already, but otherwise?
Yeah, I think we've seen it already. I think it does vary from jurisdiction to jurisdiction, even though it is a regulation. And I think in part that comes down to how the regulation is interpreted and implemented locally by the different regulators.
Yeah, maybe Kemal, you can share some insights
And
on
exactly. I wanted to add something about the application processes. I think we have also to distinguish where the players or the companies who are applying are located. For example, if I'm located in Germany and I experience for 2, 3, or 4 years a strict regulation because crypto assets were qualified as financial instruments, then the application process is not new for me. I have maybe to provide additional policies and so on, but in general, I have an AML process, a compliance team, and so on. So then it's much easier than when I'm located in a country where there was basically no regulation at all.
Yeah.
And now when we come to your other question regarding e-money token, that's also an interesting point. Or did you want to ask something, e-money token? Because I was too fast and interrupted you.
Go ahead. Just
for example, if I'm applying for a crypto transfer license in Germany, basically BaFin says right now you can't transfer e-money token, which is quite difficult because they published a new guidance notice. And if you take a look at MiCAR, there's no statements like that. So MiCAR says basically only if a transfer has a lot of features which are comparable to a payment transaction, then a payment institution should do that. But now BaFin is taking the easy way because it's difficult to distinguish, okay, how many features are necessary and what kind of features. Then the BaFin says basically right now, okay, if you have a license or a crypto transfer license, you can't basically transfer e-money token in Germany. But I can imagine that's different in other countries, and that's the first big problem.
No, I just want to add that there's been a huge discussion on European level on that, and there's also a paper published by, I think it was the European Commission writing to EBA and ESMA to ask for I would say no action letter is the informal term you would refer to. So that there's been plenty of discussion in this regard. So it's rather interesting how they at the end will manage it forward. But I fully agree that this is a topic that is of the utmost importance. And it's going to be very, very interesting how this plays out in practice. I don't think it's a bigger topic for the arts. So I think the arts share the big question, what is a MiFID instrument? What is a asset reference token? While the e-money token share the big question, what is actually, I would say, falling under PSD2, and also additionally, which services, because there's some discussion, is custody under it, is transfer services under it, is both under it, is it just if you combine it? So yeah, that's quite interesting to follow.
Yeah, especially especially there are topics like SCA, strong customer authentication. That would be difficult for wallet providers to add. So if I have basically the private key, then I can execute a transaction. But where's the second factor? So
there's another issue with that, and that is on the payment industry. So I think with e-money token, we would see a lot of potential, and you can go deeper into that, of course, but we would see a lot of potential innovation that would actually enable payment institutes and other to use e-money tokens for payment reasons. And if now they're not allowed because they would then be providing custody services under MiCAR and or transfer services, because that's the other side of the coin. So it's not only falling under PSD2, but also then e-money token under MiCA as well. So that would be quite a stop to the industry and also not something that is very common. And I want to add one more speciality. I know it's a deep dive in Article 62 MiCA, but nevertheless, they don't even have a step-up license, if I'm not mistaken. So while e-money institutes can do a quite easy notification and get a MiCA license, a payment institute would need to go through a full MiCA license process. And I don't think this overlap makes too much sense currently. I think it was not intended like that. And now they're trying to struggle a solution. I think one of the things we'll see is how it will be solved in the Payment Service Directive 3 or PSR. But until that, I fear we will have some unclarity.
Exactly.
Maybe one point to add on the, let's say, on the divergent interpretation between different member states. I think that's not, I mean, let's say it's a regulation, so it already provides, let's say, the highest level of harmonization that can be done through a European act or legislative act. I think there are a number of level 2 and level 3 measures still yet to be published, some of them. But it's not something that is, let's say, specific to the crypto industry. I think this divergence, you see it also in the financial sector with banks and investment firms that operate in different member states. So that's not something I think that is specific to MiCAR itself. Of course, I mean, in one big member state, the regulator may be swamped with many demands, for authorization, where in a smaller member state, maybe the regulator, it can be more accessible. So these are also question of facts, I think. And then overall, I think regulators do, consider the regulation and the level 2 and level 3 text. And I think ESMA will be trying, and EBA, to the extent they are competent, to harmonize where they see an issue arises. And I think the market and Christian and everybody so far raised a number of issues, and I think the authorities have been discussing those in different letters to each other and also reports.
And I think this is a really good point about it, not being necessarily unique to the crypto asset industry. And in fact, actually, it's a sign that the industry is maturing, that the regulations are coming into force. And, it's not, I know we'll get into this later in our discussion, but it's not even just going to be an EU question. There's also going to be the global harmonization elements as well that firms are going to have to grapple with, because most firms don't operate just in the EU either. But I do think overall it's a good thing. And, as we move through these steps of implementation, as the industry continues to mature, and as the regulators get their own teams into place as well, because that's happening on the other side, this is all just part of the progression of industry. But coming back to something that someone said a little bit earlier, the EU is still one of the first to have this comprehensive framework. And so even while there are these kind of challenges, I think it is still very notable that they are, really advancing it forward. And really, if anything, it should be a call to industry to, keep responding to the consultations as they come out, to continue to engage with the regulators where these pain points arise, because that's part of the implementation, and that feedback loop with the European authorities is critical here.
Yes, and maybe just one thing, because I think we focus a lot, and lawyers and ourselves in the industry that do that a lot. We focus a lot on the unclarity, but actually I want to highlight that MiCA brings in a lot of clarity. So the one main important point, at least from my point of view, is that most of the things, it brings 100% clarity, or not 100%. Nothing is 100% certain. If you ask 3 lawyers, you might get 3 different opinions. But in general, I think it brings a lot of clarity, and the other things are more detailed, but still those details really affect the way how you see the asset and how this is, playing out in practice. So it's a huge and important topic. And I think it might just be a little bit of deep dive. So depending on our audience, also, it might go a little bit already too deep into the details and the legal areas of MiCA while we didn't yet complete the picture. For example, we didn't talk about CASPs yet, but Anne, however you want to have it.
I mean, up to you. If you want to bridge it now, I'm happy to discuss it if anybody poses a specific question. If you want to give a brief overview, if you want to talk about CASP for a bit.
Yeah, I can make a short setting the scene, and then I give the word over to all the other experts on the call. So we as CASP, we see a quite clear and tailored framework that is similar to what we already saw on the other license applications. We can think about MiFID or Payment Service Directive. So overall, there's a licensing procedure, which is quite extensive. Then you have a lot of obligations that are clearly numerized and clearly structured, things like dealing with conflicts of interest or publishing ESG information, or also having a wind down plan, having own funds, requirements of prudential safeguardings, having rules in regard how you segregate your assets. And then Article 75 forward, you also have details on how you need to treat your services, how often you need to provide a custody report, how often you need to publish data on things like if you are exchange or if you're trading platform, etc., etc. So overall, I think there you see a quite clear framework that will really bring a lot of clarity. And especially also it's and I think it's very important, a tailored framework for crypto asset service provider instead of just including it in MiFID. So when we look back a little bit in history, there was a discussion to add crypto assets similar to what Germany did as a financial instrument, and then MiFID would have applied, which is in general not per se an issue, but it comes down to a lot of details and a lot of troubles when you go into really the nitty-gritty details of it. So I think it's quite clear that we in general, but also the whole industry is very much in favor of a tailored regulation that we now have. And I think we'll see with the first licenses that are getting issued around Europe, how this will play out in practice. Will be for sure an interesting ride. Yeah, I think one thing I want to also mention, because it's not so often discussed, are the rules on market abuse. So that is also a big change for the whole industry. So while there was not a lot of those things in the past regulated for crypto assets, it's very common in the financial instrument world. Now we have those rules also for crypto assets. And I think that would be it from my high level framework. I'm sure somebody else wants to add some way more details.
Well, I just would like to add that MiCAR also stipulates consumer protection provisions. Yeah, and so now we have a unique regulation or provisions regarding consumer protection for whole Europe, and that's also a good thing.
Maybe I can do a step back actually, rather than drill more into the details. I think one thing, especially for people that are not so familiar with industries, I think we all are. I think MiCAR, provides really for a harmonized framework for the issuance and for the provision of services in relation to crypto assets. And then in addition, as Christian mentioned, it has, let's say, these market abuse rules. So why this, I think, is very important, at least as a lawyer. I think companies previously, when they wanted to launch their company, let's speak about a CAS. Oh, sorry, let's a crypto custodian. I think that's one very typical business that a company could intend to do. So they had to actually look each jurisdiction of the EU and then consider whether that's a regulated service or not. And if it's regulated, they had to actually, if they want to service, clients based in that jurisdiction, they had to get a registration license or nothing, or operate on a sort of exemption. So I think really one of the main advantages, and I completely agree that there are many uncertainties, but I think that that's for sure something that has been clarified. So all these existing previous licensing regimes or registrations, they are, let's say, superseded by MiCAR and by the CASP license, and it's the same for the issuance bit, basically. So if you want to issue crypto assets, you would need to follow the requirements of MiCAR. So I think that's one thing which is really important, and maybe for people that are not so familiar, it's just something that they should take into account when they hear about MiCAR.
Yeah, I think what's very clear is, at least as the point you made, as we move forward, the industry is growing. It is becoming more prominent, more important. Therefore, we see, it's adapting to the whole landscape in Europe. We have legal certainty, as you said, Christian, a little bit more, at least better than before. So it's a very, very good first step. It's a great first step, actually, for a level 1 to establish some framework for businesses to operate in. So you have some guidelines, some, a framework that you operate within. Now we just need to see how the market responds to it and how MiCAR can adapt, and whether it's flexible enough to adapt in the first place. Something you all have also hinted at before, what are the actual barriers to entry? Because it does sound like there will be some discrepancies in terms of who benefits and who struggles. Will regulation also attract traditional financial players into crypto? is this a catalyst for institutional adoption as well? What are your thoughts on, the market reality of that?
So maybe just a couple of thoughts from me to kick off. And actually, I'll start on the institutional side, which is that for a lot of the banks and the institutions, the blockers were not necessarily the lack of MiCA, though they did, follow that very closely. But as we were discussing at the very beginning, a lot of the products that the banks are interested in will likely fall under MiFID. So it will be an expansion of their existing business line into tokenized products or, using DLT for books and record keeping. That's not actually something you necessarily even need MiCA for. And if you look at, organizations like Euroclear, they actually operated outside of the DLT pilot regime because what they were doing actually fit under existing EU law. That being said, I think you do see a lot of new innovations coming out of the banks as well. You saw SocGen Forge, for example, with their stablecoin issuance. They're using public chains. And if you think about what was holding back the institutions, I think a lot of it was, one, since they're global banks, the uncertainty in the US, which I know we'll come on to later. So I think some of the banks will now move a bit quicker since they can think about it as a global business level. But then two, I think there was things like the Basel requirements and the capital requirements, which were causing uncertainty for the banks as well, which would, mean that it was just frankly too expensive for them to set up crypto and digital asset businesses. But, this is now, I think that they're really coming into this space a lot more as those laws are changing. Now, I think back to the other side on market impact, obviously, as a lot of my kind of fellow panelists have already alluded to, MiCA has clarified a lot of things for the CASPs. And so I think that, I won't sort of monologue for too long, but yes, I think the market impact is broadly very positive. People are going to kind of continue to choose to grow in the EU because of the certainty that it provides. But I thought it might just be helpful to set the scene on that institutional piece first.
Yeah, completely agreed. And I would add on the institutional side, I agree that potentially institutions were not waiting for MiCAR to consider whether they would actually let's say expand their business to cover crypto. But I think it actually, let's say, now these players that are the crypto exchanges and also other providers of crypto services and even issuers are regulated to a degree which is similar to financial sector actually legislation, which actually gives comfort. And then from a risk analysis, basically institutions, it's much easier to then enter into different let's say products or cooperate into commercial arrangements with these type of players.
Completely agree with that.
I was just going to add to that. I think I would echo a number of those points there. I think whilst perhaps the institutions weren't looking for MiCA directly, I think the move into tokenized assets, actually MiCA lends itself very well to that, in the sense of, even though it's completely product legislation applied, serves the tokenized assets sector quite well, even though it's a different product.
Anybody else?
Maybe if we bring it back a little bit more to MiCA itself, because I think security token are very, very interesting, but also have a lot of still difficulties and issues, especially if you look in the secondary market. I don't know who mentioned it, but the DLT pilot regime is just addressing one of those. So there are plenty of those things that are at the end really details, and also the CSTR is another one that you need to think about when you are issuing a bond or a security token on the on DLT basis. But if we just go back to MiCA, I think it's also quite interesting that you see a lot of things that are actually in MiFID defined now replicated in MiCA. So for example, and especially the services and the definitions are very much relating to what we already all knew when you looked in MiFID. So custody and administration, exchange services hidden a little bit, trading on the own account, RTO is RTO, execution is execution. So you see that that is quite I would not say copied, but at least it's oriented on what is already there, which brings us also already a little bit of literature on that and clarity what might be in or out from the services. And I think that's also quite a smart move, while still creating tailored rules to not restart all over, but to actually build upon the interpretation that has been there for years when you look into MiFID.
And I think actually this is a really important point. And, to clarify, I'm not a lawyer, so we'll leave this to the other very smart lawyers on the call. But I think a really interesting point with MiCA is that for a lot of these things, there's no jurisprudence. And so as we see the kind of rollout and implementation across the member states, while, businesses are growing and scaling and sort of finding their place with their new licenses, I think these next couple of years are going to be really interesting because inevitably some things may actually end up going to the courts. And then that will give us more clarity and again, feed into the overarching regulatory framework in the financial services ecosystem, which is actually, again, a helpful thing for the overall maturity of the industry. Because, for a lot of this is all completely new. And as, again, the framework continues to grow, and Sophia mentioned at the very beginning, things like DeFi, for example, and staking, again, these are going to have to be this continued iterative process. But I actually, while people sometimes complain about it, think that this is a strength of EU regulation, that it can be continuously evolving and that it's not set in stone, and that you can change it, as we've seen with MiFID 2. As painful as some of these processes can be, that ability to evolve can be a real strength.
I think certainly it is, and especially you have to, considering how many member states we have, it's just a matter also public perception wise. I think that the EU is seen as the regulator, and we are always very regulatory heavy. So do you all believe that MiCA's stringent requirements actually prove to be a bit of an impediment to innovation, or is it, does it provide the certainty that it should, and therefore it guides businesses through the whole process and through the market actually?
Well, interestingly enough, I mean, yes, I know everyone, that's the old joke is, that the EU always regulates first. But actually, if you look down into the technical detail of what some of the proposals are, the EU isn't actually as stringent as some of the things we see in other jurisdictions. So I know we don't want to make this too much about what's happening globally, but market abuse has already been mentioned a couple of times on this call. Right now, the FCA is also consulting on market abuse and admissions and disclosures. And actually, a lot of what they're proposing there in terms of the due diligence requirements and the liability for crypto asset trading platforms is much more stringent than what we see under MiCA. So that's actually kind of an interesting comparison that, in that way, MiCA is actually, a bit more balanced in terms of innovation. So that's just one example. And I would say that just because the EU produces a lot of regulation and overarching framework doesn't necessarily mean that it is always the most stringent. And I do genuinely believe that the regulators did try to balance innovation and regulation. Maybe Christian disagrees.
Yeah, no. In generally, I would say I agree. I think we need to distinguish a little bit between MiCA level 1 and level 2 text. So I know it now becomes technical again, but you have the European regulation, which has been out there for now roughly years, actually, roughly 2 years in the final draft, and then all the things we saw, 1.5 years since it was really final, and now in application, roughly 2.5 months. And then you see all the RTSs that are actually ongoing. So that means details to the legislations that are in MiCA. And if we have a look there, for example, on the RTS on market abuse, which is not yet final, or on the other RTS, we see that although MiCA had a very proportional and I would say even innovation-friendly approach, I would tend to say that I missed that approach at some parts of the level 2 texts. So they have a lot of things built in that I saw in MiFID already. And sometimes they also can be a little bit much, so to say. While we have a quite clearly defined rules on level 1, we do see that the level 2 text tends to drift apart, and there has been some very interesting discussion between ESMA, EBA, European Commission, and at all levels. So that is the only thing I want to highlight, because on level 1 text, I fully agree. On level 2 text, you see that they are introducing very detailed rules as well.
No, I would agree with that. I would agree with that. And I think that, because we have also been in the process of responding to quite a few of those consultations. And I think that, again, highlighting here the importance of engaging with the regulators, I think some of these things were technical nuances where it's, drawing out, this is the data that it's possible to report, or this is what, a CAS could be liable for disclosing, and what actually doesn't make sense from a liability perspective. And I think those really like technical points of feedback are actually critical to feedback to the regulators so that they can adapt where necessary. So I would agree with you on that.
I would agree with you on the level 2 text. But I'd have a slightly different view on the level 1. I think it could have been more innovation friendly. I think there are certain parameters in there that are relatively conservative if you look at it even against some of the banking regulations, actually. But I do think this happens when there are new industries and there's innovation. I think it would be critical for MiCAR to adapt as we see the industry grow. Otherwise, I think it could end up in a place where it does stifle innovation.
I just want to maybe highlight one thing. I think it's different for CASPs than for e-money token issuer. I think for CASPs, it's a little bit more proportionate, while I do share your viewpoint on e-money token issuers that there are some rules in there. And if you then look really across the globe to what the US is doing and how they promote now US-based stablecoins, they take a different approach, because I think they see that as a gateway to have a strong dollar, while we see this as a threat to monetary sovereignty at the end. And I think this came from the Lex Libra discussion we saw at the beginning. So I do share that viewpoint. But at least from a CAS perspective, I think most of the rules are wide proportionate at level 1.
Yeah, I actually would agree with that, Christian.
I think what's becoming very clear is that there is, like we all say, some certainty, and we do have that, but some gaps remaining. So clearly various differences in treatment, a little bit here and there, different requirements, depending on what you categorize as. Therefore, addressing some of the other gaps, perhaps, as we talked about beforehand, what do you think about the lack of DeFi in MiCA? So basically, the absence of DeFi regulation can be viewed differently. Either way, well, either it's a way for the industry to grow because it's not regulated yet, or it's a bit of a regulatory blind spot that could in the future create some issues. What are your perspectives on this?
Maybe I can start with giving just some initial thoughts, and then people can complete. I think let's say the official answer that the Commission and that we have been hearing about DeFi is that at the moment when MiCAR was drafted, they didn't think that there were sufficient use cases or sufficient risks posed by the DeFi space in order to actually require it being regulated under MiCAR. Of course, MiCAR allows, let's say, the Commission to review that position, and then include DeFi as well in MiCAR. I think one thing to note is, although we say DeFi is not regulated in MiCAR, DeFi is very broad term. So I think when we look at DeFi applications, and especially as lawyers, we tend to unpack them and look exactly what the services that are being provided by different operators in order to really determine whether that is an unregulated business as such. And I think that that's really important, because sometimes people say, "Oh, I operate in the DeFi space, so there is no regulation whatsoever." I think that's very it's difficult to say that's actually true.
I would just also add that not legislating or regulating right away isn't necessarily a bad thing. And I do know that, that a lot of the European authorities, that they are researching this, they're looking into DeFi, and this is happening both at EU level and also at the national competent authority level. So for example, the ACPR and the AMF in France, they just recently published the findings from their working group, which was all about smart contract certification and decentralized finance. I think a really excellent piece of work, and it's great that they're taking an interest in these topics. And so I think it's all this to say, to kind of re-emphasize your point, just because there isn't, a ton of legislation on DeFi doesn't mean the authorities aren't considering this and thinking about next steps. So I think it's absolutely coming, but equally there is something to be said for letting the market mature and also letting the authorities understand the topics better and how they might want to approach it, because realistically it is a nuanced area and it's going to require a different approach than what we've seen in traditional finance.
And if nobody else, I'll speak again. So one thing that is quite an interesting approach, I would say, is that they didn't really take an exemption from MiCAR, but they just mentioned it in recital 22, if I'm not mistaken. So it's not really a lot of legal clarity. They could have done it more with an exemption that they really would have explicitly said this is exempted or not. So what we already see, and I think the Danish authority was one of the first to publish something in this regard, is that regulators tend to focus quite strictly on the interpretation of those things, and say, yeah, well, if you are owning, I don't know, the environment, or if you're owning the revenue streams backwards, is it really DeFi? Are you profiting of it? So that is one thing to caveat in this regard. The other thing is, I think DeFi is very important for the industry and also very, very relevant. On the other hand, we need to ensure that we don't create other risks and have a real level playing field, because there are also some risks connected to DeFi, and if we don't mitigate them correctly, even if MiCAR wouldn't apply, there are some issues around that. And I guess this is how we'll see this proceed in the future, either in MiCAR 2 or just in interpretation. I do fear that a little bit they opened the can of worms, if you want to say it like that, because they didn't provide a clear exemption. And now more or less every NCA will interpret it a little bit different, and it's either based on where you are with your headquarter, or even worse, even if you are just in a different area, then they would still say, yeah, even if you're headquartered in Denmark, then it's still applicable in Luxembourg if you're providing services there. So that's going to be also interesting how they will play it out. That refers back to my argument of you cannot passport something that is just an interpretation where you don't actually have the license to do so, so to speak.
I think it's also in the report all of you actually mentioned from the EBA and the ESMA. They do also analyze now. They published a one on DeFi and crypto lending, borrow and staking, specifically in the context of MiCAR as well. And it's still obviously DeFi remains niche, whereby only 4%, I believe, of crypto markets the crypto market is locked in DeFi protocols. The EU, on the other hand, is above the global average. We're not at the US level. South Korea is also pretty strong, but we're above the average. And even though also the EBA and the ESMA, we don't propose any regulatory changes or call for regulation, at least not yet, they do highlight key risks, like you said, because then there are still risks remaining. So I think let's shift the question a little bit. Maybe I'll rephrase it. Legally speaking, for instance, is there a point where DeFi operations might still fall under MiCAR or other EU financial regulations? Or are there potentially any gray areas legally for platforms that appear to be decentralized but have some level of control?
I think Christian alluded to that actually. Well, when he responded to the earlier question, but indeed, I mean, to the extent a DeFi operator, so let's say a DeFi platform actually can be, or one of the providers, let's say, can be considered as actually carrying out a crypto asset service, then that would actually fall within the scope of MiCAR. And then I think where, at least from Luxembourg standpoint, we have been looking at even before the entry into application of MiCAR was that many of these platforms actually could fall within the traditional financial sector regime, and those are not necessarily always harmonized at the EU level. So whereas, I don't know, a commercial lending would not be regulated into a jurisdiction, in others it will be regulated and it will fall within the banking monopoly. And then, for instance, some of these DeFi protocols could actually trigger a license. Then the question is who is actually triggering a license if you cannot pinpoint a specific operator. And I think to Christian's point, I think why they didn't, my personal view at least, include into the exemptions. Normally when you do, so when you see something included in the exemptions, it is a term that's there is at least a definition or some kind of clarity on it, whereas recitals are generally not considered to be as binding as the articles of the regulation. They provide certainly guidance, and I think we all look at them as very, very binding. But still, if you include it still as an exemption, then question is you would need then to provide clarity what DeFi is and what is not DeFi and what will fall then within the scope of MiCAR.
basically, I think it's an easy answer. They were not sure if they should regulate it or not, and it's the same with e-money token. In the sense that they are also not in the real articles or real legal text written down that only in some cases payment institutions should execute the transaction. So I think it's the same. They were not sure. There was also some discussions regarding fractional NFTs, and I think at the end, too many discussions and not enough time to make a lot of decisions, and so that's another uncertainty because of the short amount of time.
Yeah, I think that's a progression that you all talk about is for level 1, level 2, level 3. We're not there yet. So what can we do, basically? What can there be done to actually make MiCA reflect these market realities? Maybe in brief, if you have any specific key points here.
I think Elise alluded to that actually earlier when she said markets, should engage to consultations. Whenever ESMA is launching a consultation, then marketplace should provide their responses. And I think at national level as well, I mean, certainly the French regulators have been very vocal, but also in other smaller member states, regulators are launching surveys to, let's say, to their markets to actually see what the impact is, what the use cases are, how do people actually implement, what exactly the risks they see, and whether they see hurdles or actually everything is crystal clear. And I think that's really important, and that also feeds back to to the legislator as such, so that they can make any changes if they consider so in addition to what is, let's say, already said by the market, let's say, more publicly.
Yeah, exactly. And I mean, look, and I know things are changing in the US now, but the EU is not a market that typically regulates by enforcement. Like that was very much the US playbook. That was not what was happening in the EU. And so I feel like I always encourage firms, like, if you have questions about your jurisdiction, build a relationship with the regulator where you can. Go talk to them. Ask them if you have questions. And actually, I think that type of relationship building is critical on both sides so that the regulator can have feedback from the industry, but also so that if you're a firm, you can get that certainty that you need in terms of operation. And I think, intent does matter a lot. Obviously, there's a lot of lawyers online. So there is the letter of the law and adhering to that within the strictest, sense of the regulation. But also, it does matter if you're a firm that is really trying to take a compliance first approach and you are trying the best as you can to comply. And if you have questions, they're going to, for the most part, be receptive to those as long as they're within the bounds of things that are reasonable.
I can fully highlight that and fully reiterate that. I think it was also where we started the whole journey and how we were set up from the beginning, and this is also why we did so well. You need to remember that back to 2014 and then 2018 when I joined, there was even more unclarity, and we were actually with the first ICO hype 2017, 2018 on the potential cross line if we will go down the regulation by enforcement road, because there was a lot of discussion. What is actually a security token? What is actually not a crypto asset but falling under financial instruments? And also we saw that some countries did walk that way at the end. So I think MiCA as a tailored rule set makes just much more sense and brings you much more legal clarity in this regard. And I want to highlight one point I think that has not been mentioned so much. I think it's very, very important for the industry to really get together in industry bodies, communicate with the regulators, ensure that we are heard, ensure that our points are seen, because also educate in this regard. A lot of things are unclear, unknown in movement. I think somebody mentioned the Basel own fund requirements for banks as well. So while we have MiCA, which is rather, I would say, technology neutral, if not even advantage to it, and also strengthen innovations, we have a fully, I would say, fully hindering approach regarding the way how crypto assets are handled from a prudential side when it comes to bank exposures. So I think that is something that I do see where it's coming from, and then we also have the Basel general framework, but you need to understand that also the US is part of the Basel framework. And I didn't read a lot of those things when you went through Donald Trump's executive orders. even more, he highlighted that some of the rules that were already applicable are either reduced or are not gonna be in place anymore. I don't remember the specific rule because I'm not too much into detail of the US law. But
Yeah, I mean, I would just get a couple quick clarifications on the US and kind of what to expect, which we would probably need a whole separate webinar on. But just that, general consensus is that Q1 is going to be purely focused on stablecoins and all the requirements around stablecoins. We have the Genius Act and the Stable Act at the moment. We were going through Senate banking, and what will come out will likely be a combination of those two acts if people are interested. Q2 will focus on market structure. So if people remember FIT 21 from last year, that was kind of the last market structure bill, and it did have quite a bit of consensus around it. That's likely going to be tweaked and revamped, and then we'll come out with a lot of those additional clarifications kind of beyond the stablecoin regime. So that, in like very, very briefest sense, is what you can hopefully expect out of the US this year.
And I think that also very nicely ties into our final block of discussion, whereby we have to look at the global picture. Finally, now, the US is obviously a major jurisdiction doing a lot in the space, especially 2025 has been, let's say, a particularly exciting year in the space. But before we maybe talk about that, if we even touch upon that, because like you say, that merits a whole discussion, a whole day of its own. Maybe, Elise, also when we talked beforehand, you said there's other jurisdictions we often overlook who have had regulations in place, maybe not as comprehensive, but who have been doing things in the space before already. So where do you position Europe now in the global landscape?
Yeah, so this is, I think, a really interesting point. So if you think back, this is way before MiCA even came into force and the level 1 text was done. We already saw pretty comprehensive frameworks out of areas like Japan, Singapore, Hong Kong. Asia was very far ahead in terms of developing their regulatory framework. And while those frameworks are kind of still being iterated, and, for example, I think Hong Kong is updating their stablecoin guidance, for example, they had, some of the earliest frameworks in this space. Other jurisdictions I would just quickly highlight are, for example, in the UAE and both Dubai and Abu Dhabi. I think those are very much jurisdictions to watch at the moment. So Abu Dhabi has recently been consulting on quite a few different things. They updated their digital asset framework guidance, which that consultation closed just about a month ago. And then late last year, they also updated their stablecoin guidance with regards to what they call fiat reference tokens, but effectively stablecoins. And again, pretty competitive proposals on both fronts. VARA is obviously a bespoke regulator in Dubai and has a bespoke licensing framework and regulatory regime that a lot of firms find easy to work with, anecdotally, from what I hear. So, I mean, I could kind of go on. I know we only have a couple minutes left before we go to questions, so I won't take too much time, but I would just highlight that one, Asia has been ahead for a very long time, and firms have been growing and building there for a long time. And I think that's really evidenced by the innovation you see coming out of that region. But then the other I would highlight is definitely the Middle East as a region to watch, because I think that they make a very competitive offering to firms, especially in terms of how they are really trying to connect the ecosystem, provide opportunities for capital in a way I think we don't necessarily always see in Europe in the same way.
Perhaps if anybody else wants to, chime in on the global perspective here, I think it is a very valuable point.
I think one point I want to highlight is we see some countries who try to take a step-by-step approach, and I think it was also you, Ellis, who mentioned it in the UK, where you see now consultation after consultation after consultation. We have the market abuse topic, we might have other issues, we then might have prudential regulation, we might then have conduct, we might be added to the FSMA, etc., etc. So I think there MiCA did actually a good thing in the sense of creating one framework that is then analyzable and applicable overall, instead of creating multiple levels of integration, reintegration, discussions with the regulator. I think that's at least one thing I see as a strong advantage. And I also do see that this might be an advantage compared to the US, because the US also have a lot of those moving parts and also a very, very, very dynamic and complicated regulatory landscape. We will see how the SEC, how the you know what I mean.
The FTC. Yeah, exactly. No, and it's very true. And I think that, this is the one thing I would say always with the note of caution when it comes to the US is that, while there is a lot of enthusiasm in the US around crypto at the moment, and everyone's very excited about having a crypto-friendly president, that does not always equate having very fast legislative changes. And so it really does still depend on what happens, in the Senate, in the House, the kind of getting that bipartisan agreement, which we very much might see. And I think, that would be very welcome by industry, but you still have to have that legislative and then eventually regulatory certainty. And then that needs implementation as well. And we've been discussing the challenges of implementation for this whole call. So it will be an interesting year for sure.
Yeah, maybe I would just add a final remark on that one. I do agree on the point that, Donald Trump can be making many, nice headlines, but then, of course, the legislation, it's a question whether that would come as quickly as possible. But I think one thing that we in the beginning, and maybe you have heard about the SIB 121, it's basically custodians had to disclose what they hold as crypto assets. So that actually was seen as deterrent to US players actually holding crypto assets. And at the time when, Donald Trump said that, that actually has to be abolished, I think we all thought that would take time. But actually now it is no longer, it's repealed. And I think that has actually created a lot of expectation from the market that there will be still some things coming quicker than we may think. And I think specifically for custodians, that is seen as let's see, a precursor to more activity. And we see it actually how the US also impacts a bit the activity in Europe, which is I guess a nice thing to see as well.
I think specifically in the US context, something that is a hot topic as well right now, with them focusing so much on global USD stablecoin dominance. Do you think MiCAR will actually provide some safeguarding here in that respect? Like Christian, you also said, it's monetary sovereignty that's written in capital letters in Europe. The digital euro is supposed to be a response to that and protect Europe in that sense. But isn't MiCAR a bit more applicable right now? And generally,
I think that the approach couldn't be more different. So while we see that the digital euro is still on the at least thought of everybody who is involved in this, but there are also very critical topics, not only privacy, but also from the industry, user experience, etc., etc. So there are really some issues how to get the CBDCs out and how to roll the digital euro out. We see that again in the US it was more or less taking out of the agenda, and instead they went into strengthen actually stablecoins. So that's a very different approach that I see in Europe.
Yeah, I think to overturning the European market, I think let's see, we all know now that with MiCAR application, let's say stable coins that are not MiCAR compliant should not be traded, offered, or admitted to trading, and even let's say certain let's say services like execution of transactions in respect of let's say non-compliant, non-MiCAR compliant stable coins are prohibited. So I would think that USD pegged stablecoin would need to be issued by a European issuer and European regulated one. And I think that is actually the safeguard that, let's say, the MiCAR regulation itself provides. And I think somebody alluded to it. It's indeed as a response from, let's say, Libra and Diem and all of the risks that posed at the time. And let's see, this monetary stability and monetary sovereignty of the European market was, let's say, directly reflected in the requirements around stablecoin issuance.
Yeah, I think overall you have to look at all these issues as interconnected. There's nothing that can be looked at in isolation, neither MiCAR nor US stablecoin or the digital euro. And I think with that, I would also like to wrap up our discussion. Another big thank you to all our panelists for sharing their insights, and to also our audience for listening, engaging with us. Feel free also to follow our experts. Many of them actively share updates and analysis on these topics. Some also write blogs and contribute to industry discussions. So be sure to check that out, and to also follow the Digital Euro Association to stay informed on the latest developments in the space and on financial innovation in generally. So we would love to hear from you. Once again, I will ask you to submit your questions now. And we have one already, so I'll just pose that as well. But if there's anything the audience would still like to hear from us about, please do share that now. Otherwise, we have one question. Does MiCA allow to hold digital assets on a cold wallet without coverage collateral?
So maybe I can start with that. So the general understanding is that if you hold your assets on your own, that is normally not falling under MiCA. We can elaborate more on that, but the whole administration and custody part is really if you are holding keys on behalf of somebody else, which is a very common approach that was also around for the whole stock side of things. But of course, that's a little bit different because at least if you don't look at to the very early stages of stocks and actually bearer bonds, where you could hold them in hard copy, there was no possibility for you to hold them physically. But in general, the same application as the same understanding prevailed.
Yep. And I would just add that, the intent of MiCA is not for the regulators to be regulating individual citizens and their kind of accounts and how they manage their own money. It's meant to be regulating businesses and firms. If you are an individual that is providing as a crypto asset service, then yes. But I think this comes back to those like CASP categories, which is, custody and administration of crypto assets on behalf of third parties. If you're operating a trading platform, exchanging crypto assets for funds or other crypto assets, if you're executing orders, if you're placing of crypto assets, reception and transmission of orders, or providing advice. Those are all the CASP categories. So if you're not doing those things, then I think safe to say that you're probably not going to fall under MiCA regulation, but we'll defer to the lawyers again on the kind of final word.
No, that's yeah, you said it. So if there's no customer and you're doing it for your own, then it's yeah, then there's no then you're not subject of a license requirement, and well, that's basically it. And there's also exemption for group companies. So if you're doing the service for a different group company, then that's also okay. But if you are doing it for a third party, or you have customers, then yeah, then you are subject of your license requirement.
Okay, I think that answers it very precisely, actually. So thank you. I don't think there's any other questions, to be honest. If you guys have anything to add at this point, please, again, now is the time. Otherwise, again, thank you for taking the time. Thank you for sharing every one of you sharing your insights. I thought this was really informative. I learned a lot, certainly. So yeah, I will sum up everything after our call here, and we'll post all of this online, and everybody can check it out again if they want to learn more about MiCA. So thank you very much, and thank you everyone for listening.
Thanks for having us.
Thank you.
Thank you.
Thank you.
Bye.
Thank you.